But here's the thing, some things that you need to realize, even if this idea gains some traction. Number one is, if you're going to have a 50-year term, the time value of money says the rate's going to have to be higher than a 30-year term. That's just fundamental econ, right? In fact, it's already the case. If you want a 40-year loan, which I can provide you, any lender can provide you who does non-QM loans, those are going to have a higher rate than a conforming Fannie Mae and Freddie Mac loan. And a higher rate, of course, mutes or somewhat offsets the benefit of that longer repayment term because of the higher rate. So then if you, by extension, take it out even another 10 years to 50 years, the rate is going to have to be higher still. Like right now, the difference in rate between a 30-year loan and a 40-year loan is probably in the range of about 1/4 to 3/8%. Well, if you're going to then extend the loan term out another 10 years to 50 years, that's 600 months. Guess what? The rate's going to be higher still, probably another 3/8 to 0.5%. So then when you consider a conforming 30-year fix, as you saw in our rate grid, we can offer you $599. Well, a 50-year loan probably is going to be at 6 3/4, probably at a minimum. And as a consequence, yeah, sure, that longer repayment term lowers the payment, but then that higher rate raises the payment. So the net benefit to the borrower isn't going to be that significant. On some loan amounts, it could end up being nothing more than maybe $80 a month. That can help, certainly. It's better than nothing, right? But at the same time, is that going to make a huge difference in terms of affordability for most borrowers? Probably not. And to the extent that this loan program, this loan term idea gains traction, and if it does attract more borrowers, it could actually exacerbate the other part of the spectrum, which is home prices. If this proposal creates enough interest that we have more borrowers stepping up to try to buy a home with this particular alternative,